On today's hot sheet, I'm discussing CoreLogic home price insights, the Fannie Mae home purchase sentiment index, and apartment, office, and retail trends. Today is Tuesday, July 9, 2024. I am Byron Lazine, and the hot sheet starts now. All right, let's go. Today's hot sheet here. The hot sheet, of course, is the only 24-hour look back on the housing market every single Monday through Thursday that the markets are open. There's a lot of real estate media popping up out there, but this one, BAM, is for agents of change. It's why if it's, searchable in the Wall Street Journal or in the New York Times, or if it's searchable on anywhere on Google, we're going to bring it to your attention here with no paywall. Of course, it's something we believe in at BAM. If we're going to show you how to do it, give you the data to implement into your business, that's all for BAMX. You can use code HOT to get into BAMX and get 10% off of BAMX, of course, today. All right. Let's get into CoreLogic, U.S. home price insights for the release here in July. This was just released beginning of July, and we've got May data. It's a little bit lagging, but it's not as lagging as Case-Shiller, of course. So we've got through May 2024 and forecasts updated now from CoreLogic through May 2025. Okay. U.S. year-over-year home price gains inched down to 4.9% in May. So it's up 4.9% currently. 4.9% year over year on home prices. This is through May. Okay. Remember, Case-Shiller's got us up around 6, but it's a little bit lagging. I project that when Case-Shiller comes out on their most updated one, that it will be back down to the 5s or closer to 5 like this one as it inches down. Okay. Over the second half of the year. I said this on yesterday's hot sheet. The price appreciation is going to cool off. It's going to flatten out. It's going to inch down. Here's an early inning sign of that from CoreLogic. 4.9% year over year home price appreciation. That's still very good. It's just not 6.5. It's cooling down. Okay. 0.6% month over month. The 0.6% month over month is also a little down. Okay. Off of their last report. Okay. So inch down to 4.9% in May for the year over year number. This was still the 148th consecutive month of annual growth in the United States. Okay. I'm going to wait for home prices to come down. Do you help me understand? Okay. That might be a great way to ask a question back. Buyer says, we've got a lot of real estate professionals here on the hot sheet. I see a whole bunch of you guys. We've got Roseville, California in the house. We've got Colorado. We've got Houston. We've got Long Island. So you're talking to a lot of buyers across the country. Okay. And a buyer might say to you, well, I'm going to wait for these home prices to come down. Oh, what makes you say that? I might ask, well, just what makes you say that home prices are going to come down? Well, they're the interest rates are high, and that means prices are going to come down. Well, what do you understand about what's happened in the last 2.5 years with high interest rates? I think prices are on their way down. Well, not just in the last 2.5 years, but in fact, in the last 148 consecutive months, we've had home price appreciation annually, annual growth year over year for every single month of the last 148. So just imagine if we had to wait another 148 months for home prices to get where you want them to be. Maybe it would take that long for home prices to get to where you want. I would argue that in 148 months, they're going to be much higher than today. But just how long are you willing to wait? I don't think buyers understand that markets, even when a home price comes down, it doesn't mean that the price of the property is actually going to be cheaper, because it depends on how long they're going to wait. Okay, according to CoreLogic as well, the case for the past, and has been the case for the past year, the Northeast continued to lead the entire country for annual appreciation. So Northeast is with the lowest levels of inventory of other, compared to other regions, is continuing to see that home price appreciation. If we had lower inventory in some of these other regions, you might argue it'd be there. But the Northeast is starved for injury or in inventory, while the Southeast is getting more inventory than other areas. So national annual home price growth. This is the chief economist for CoreLogic quoted here. National annual home price growth continues to slow as anticipated. Home price growth is anticipated to slow even more in others. Cooling appreciation over the past months is now observed in more markets as the surge in mortgage rates this spring caused both slowing home buyer demand and prices. We looked at the home buyer demand yesterday. It's plummeted year over year the last 3 years. And people get confused and think that the demand is still very strong. Well, how can it be very strong when we're at, an all-time low on transactions? Go back to 1978 to get this level of transactions. If demand was high, we'd see transactions improve. The surge in mortgage rates in the spring causes, however, persistently stronger home price gains this spring continue in markets where inventory is well below pre-pandemic levels, such as those in the Northeast. We showed some of those markets in the Northeast, I believe, last week that are like 80% below pre-pandemic levels. That's where you're still getting this pop in appreciation and a competitive environment. And by the way, those markets shift. I keep telling the agents in the North, don't hang your hat on this is the market forever. It'll shift. Florida shifted overnight. Parts of Texas shifted overnight 2 years ago. The markets that are more relatively affordable, the Midwest, have seen healthy price growth this spring, so more affordable. They're seeing a price pop. Markets with notable inventory increases, Florida, Texas, continue to see annual deceleration that is pulling prices below numbers recorded last year. That's the chief economist for CoreLogic. Okay, here's a snapshot of the country on prices. The dark red. This is not a snapshot of November, polling data. This is just home price appreciation. So don't get worried. If you're a fan of the blue, this is not a political map. This is a home price map. Dark red is 7% or more. You would never see the Northeast in dark red if it was a polling map. Okay, so Connecticut, Massachusetts, Vermont, New Hampshire, Maine, all in that dark red. You're seeing 7% or more on home price appreciation. New York on the lighter blue, 1 to 3% year over year. Where you have less than 1% year over year home price growth, that's Texas, that's Louisiana. You're still seeing home price growth in the Southeast. Okay, Florida, Georgia, the Carolinas are still seeing home price growth, even though in Florida, that is starting to decelerate. It's down to the 3.5% year over year percent change, and expect that to move even lower with where inventory is in Florida. You've got California and Nevada still very strong on home price appreciation. Okay. If we look at the home price change, top 10 states, New Hampshire leads it at number 1, 12% change in home prices. Rhode Island at number 2, Jersey at number 3, Connecticut at number 4. So all Northeast in the top 4 on home price growth because they have the lowest inventory there. Connecticut at 9.6%, 9.8 for Jersey, 9.8 for Rhode Island. Then you go to number 5, Wisconsin at 8%, Virginia at 7.5, Illinois at 7.4, Maine, again, Northeast, 7.4, Ohio and South Dakota round out the top 10 states for home price change. All of these have something in common. It's the inventory being incredibly low. They haven't caught up yet. And they're not building as much as other places in those areas. Okay, the top 10 metros right now, top 10 metros across the country as defined by CoreLogic for home price growth. Boston at 5.9, Washington at 5%, Chicago 7.2% up. Miami still with their appreciation over 8.5 for Miami. Houston at 2.1. Phoenix at 5%, Denver at 2.4, Vegas at 7.8, LA at 9.3, and San Diego, which has seen real significant appreciation over the last year and a half at 9.2% year over year on home price appreciation. The market condition indicators, MCI, for the top 10 metros, who's overvalued and who's normal. New York, they're calling normal, while LA right now, CoreLogic is saying is overvalued. Chicago, normal. Houston, Atlanta, Phoenix, all considered overvalued for CoreLogic. Washington, D.C., Virginia, Maryland, that whole area there surrounding D.C., normal. Dallas, Riverside, California, and then Minneapolis, Minnesota, all considered overvalued. So for the top 10 metros, you've got 3 of 10 that CoreLogic would consider normal market indicators, while 7 of 10 they're considering overvalued right now. So expect this theme of home price appreciation to decelerate, to continue to cool, to be the theme of the next 6 months. We talked about it yesterday. I've been talking about it. I really firmly believe in almost every market across the country, as you get into, you always get into this seasonally, but as you get into the later half of the year, you're going to see real home price deceleration. I'm not saying 10% down. I'm not saying a cliff. I'm not saying it. I'm saying the home price appreciation that we've experienced is going to decelerate. And CoreLogic believes that. Their forecast right now is that in a year from now, we will see 3% home price appreciation to the positive, as opposed to the 5% that we see right now. That's a deceleration, a 2% deceleration over time. They're forecasting that over the next month, we'll see 0.7% home price appreciation. So CoreLogic's not calling for a cliff. We're not calling for a cliff here on the hot sheet, outside of a real, job, a huge unemployment increase, something like that, a recession led by people losing jobs. Then I would change my tune on that. You'd also see Jerome Powell change his tune on what they're going to do with the rates. By the way, speaking of Jerome Powell, he's speaking today. He's got, I think, what has he got? I think he's got the Senate today and the House tomorrow. That could be backwards, but he's talking to one committee in the Senate, one committee in the House over the next 2 days, today and tomorrow being Wednesday. Okay, this is part of his semi-annual address with Congress. We'll cover that in its entirety tomorrow. The market's looking for clues on what Jerome Powell is going to say about potentially cutting rates. There's a wider camp right now that he might cut rates in September. That'd be great news for the current administration in Washington, D.C. if they get a cut in September, 2 months before the election. Jerome Powell said the election and politics has no part in what his decision is going to be. It's going to be all about inflation. But let's be serious here. That would be a win if you could get a cut and a good feeling about the economy going into the fall. There's still a lot of skeptics that a cut could come in September, but we've had better inflation news. We'll be looking closely to see what he alludes to, particularly today, because tomorrow's going to be a lot of repeat as he sits on the other side of Congress. But what's he going to say today? We're going to break it all down tomorrow. Going back to CoreLogic, they broke down the top markets at risk of home price decline. Number one, they have Palm Bay, Florida, at very high. They've got Gainesville, Florida, very high. Their confidence in this is 50 to 75 across the board. Atlanta, they're very high. That means an above 70% probability of a price decline. They've got Spokane, Washington, and then Bradenton, Florida, here in the top 5. So 3 out of 5 Florida markets, top of the risk chart of home price decline. Based on where inventory is going, that's probably a pretty safe bet from CoreLogic. You can get all 6 of the CoreLogic slides, as well as all of the further breakdown on the information inside of BAMX. So BAMX members, you get your daily hot sheet show notes each and every single day. So many of you guys are taking this data every single day and using it inside of your communications in your database, as well as the charts. Today we have 6 from the CoreLogic. There's 13 charts from this home purchase sentiment index, which I'm about to get into right now, how your consumers are feeling. So 13 charts inside of BAMX on that. and then 6 more on the apartment, office, and retail trends, which we'll cover here at the end. So 12 plus 13, 25 total charts just today inside of BAMX. Of course, our BAMX hot sheet show notes are available each and every single day. That includes our monthly courses, our community, as well as BAMX in a box, where we make content for you, emails, blogs, as well as video scripts and social media posts for you, and release those to you every single Friday. Get into BAMX right now by using code HOT to get the current discount. BAMX also gets you 25% off of BAM Mania, and prices go up BAM Mania next week. So get in on the early bird pricing now. You can use 25% off of early bird pricing if you're a BAMX member. All right, going over now to Fannie Mae just released their home price sentiment index. They do this every single month. Of course, we cover it here. This is the June 2024 data release that just came out here the beginning of July. The HPSI is a composite index designed to track consumer housing related attitudes, intentions, perceptions, using 6 questions from the NHS, the National Housing Survey. Okay, so this is a look inside of the soul of your consumers, the people living in your market, in your town, in your city. This is how buyers think right now, today, in the moment. Okay, it's a lot like these presidential election polls. Okay, you get a poll that comes out after the last debate. It swings 5 or 10 points one direction or another based on how people feel like the performance was on the debate stage. Okay, each month you could have 2 or 3 good reports on inflation, and then all of a sudden buyers start feeling better about the market. Remember, last month we were at an all-time low on, was it a good time to buy? Buyers answering the question, is now a good time to buy? I've got good news for you. We had inflation data that came into the positive the last 30 days. And since that report, we've ticked up off the bottom. Okay, so we're getting off the bar floor, and we're at least on our knees at this point with buyers. They think it's a little bit better than last month. Now, we were coming off of, again, the floor of what buyers think about the market. Okay, last month we were down at 14% for buying conditions, good time to buy. Now buyers are reporting that 19% of them think it's a good time to buy. So still 81% believe it's a bad time. It's 4 out of 5 believe it's a bad time. So it's far outweighed for buyers right now, buying conditions, bad time to buy versus good time. But there's still 20% out there that think it's a good time. Net time to buy, minus 63%. Now the month over month change is what's interesting there. The net change on net good time to buy is up 9 points. Okay, so in the last 30 days, buyers feel better today than they did 30 days ago. I would imagine a lot of that has to do with some of these inflation reports. They're probably, getting more optimistic about the potential of a Jerome Powell cut. Okay, year over year, we're down 7 points. Okay, selling conditions. And by the way, on the buying conditions, I mean, buyers have felt like it's a bad time to buy overwhelmingly since 2021. This goes back to June 21, when 64% of respondents said it was a bad time to buy. Now we're at 81%. Okay, so, well, it's a bad time to buy. I'm going to wait for it's a good time. Well, for the last 4 years, consumers have said it's a bad time to buy. Okay, selling conditions, 66% say it's a good time, 33% say it's a bad time. Net good time to sell, 33%. Month over month, that's up 4 points. Year over year, that's up 5 points. Home prices, 45% of population think home prices are going to go up. So 1 out of 2 buyers that you talk to aren't even concerned about prices, because 1 out of 2 buyers think home prices are going up over the next 12 months. So 1 out of 2 buyers aren't even concerned about price. They're concerned about finding something. Okay, 17% believe they're going to go down. Mortgage rate outlook, 24% think they're going to go down. 33% think they're going to go up. Job loss concern, 8 out of 10 people not concerned. 1 out of 5 people are concerned. that they will potentially have a job loss. Change in household income, not much of a change there. 16% significantly higher, 10% significantly lower. The net change month over month there is -2. Respondents say good time to buy here on the chart versus a good time, and then the net over time. Now, the net back in June was -32%. Now we're at -63. So things have shifted since June. Less people thought it was a great time, obviously, or a bad time to buy. Now a lot more. Good time to buy. There was in June 21, 32% thought it was a good time to buy. Much higher than today at 19. That 32% in June of 2021 should have been like 80%. If you bought in June of 2021, you bought with likely a 3% mortgage interest rate. I mean, for it only to be 32%, people were worried about, people get caught up on prices so much, and those that bought got locked into a ridiculously low interest rate, gained equity. If we just look at what's happened from 21 to today, home price appreciation each and every single year, 148 straight months, remember. And so all of those buyers are really happy with their decision. Respondents who say it's a good time to sell versus a bad time, net good time, 62% back in June thought a great time to sell. I mean, some of those sellers that left money on the table by selling then, as opposed to selling in the last couple of years. Okay. Home prices will go up versus going down and staying the same. Again, the net going up is 28%. That is the same as June 2021. So overall, your consumers, but they believe that home prices are going to continue to go up. So they're pretty smart, okay? Because that's what prices have done in the last 4 decades. They continue to go up each of the last 4 decades, okay? A lot more data in here on the Fannie Mae report. Here's the average expected percent change over the next 12 months. 2.2% on home prices, so not a big number there. Rental prices 6.1%. Respondents who say home rental prices will go up, 67%. Believe rental prices will go down. So that might be a good question. Somebody think about renting, like, what do you understand about where rental prices are going? Or, imagine if rental prices went up over the next 12 months. 67% of people believe that to be the case. What do you believe? Respondents who say if they were going to move, this one's always interesting. 67% of respondents say if they were going to move, they'd buy. 32% say if they were going to move, they would continue to rent. That number has been pretty flat over the last 3 years on both ends. It's increased a little bit on the rent from 27 in June 2021 to 32% now. Respondents think it would be easy to get a mortgage today, 46%, difficult, 54%. So that's flipped since June 2021. 62% people thought it would be easy back then. Respondents who expect a personal financial situation over the next 12 months, 34% think it's going to get better. That's up from 27% just last month. 19% think it's going to get worse. That's down from 20% last month. Here's one, and this one is interesting because this is how people are going to vote in November. At least millennials and Gen Z said this is most important to them. Gen X is also ranking this very high, while baby boomers, I guess, really don't care about the economy because they didn't have it at number 1 on their voting concerns because they've got all the money already. But respondents who say the economy is on the right track, only 28% believe this economy's on the right track. 71% of respondents believe the economy's on the wrong track. Only 55% of people in June 2021 thought the economy was on the wrong track. So big increase there. We've seen that in other surveys. And it's what's most important for people as they get into, the polling booths there in November. Is the economy on the right track or the wrong track? When we look at like the job data a lot, it's like, man, a lot of this stuff can be, portrayed one way or another. And, how firm is this economy? There's a lot of conversation around that right now. There's some early recession signs. I'm not calling for one, but there certainly is some early recession signs there. All right. I'll leave you to it inside of BAMX. We'll put all the information, all the data there. Again, I think there's 16 charts or something involved in this Fannie Mae release. So you can grab those there if you want to use those inside of your marketing, inside of your database. Moody's just came out with a piece of data on apartment, office, and retail trends. Okay. So a couple of interesting points here. Okay. Vacancy rates, multifamily vacancy stayed flat at 5.7% over the first half of 2024. That's 50 basis points above the same point last year, 80 basis points higher than the pandemic low. Supply continues to come in, okay, and readjust the market balance or even help ease some of the housing shortages. Demand has been slowly but steadily catching up. So we saw on the chart there, Fannie Mae, that's supportive of that. More people, if they were to move today versus 2021, would decide to rent. So as people make that decision, well, hey, I got to move. Am I going to rent or am I going to buy? That is soaking up some of that inventory because we have a lot of inventory on multifamily coming out. If vacancy gets above, 7 or 8%, there's going to be a concern there that there's too much inventory. Staying flat at 5.7%, not that big of a concern for multifamily right now. You get some of those vacancy levels to increase. You could see price pressure on rents, which is something that frankly I'm rooting for because it helps the inflation cause. Asking effective rents recovered some lost ground that occurred in the prior two quarters, both up 0.3% in quarter two to close out first half of the year at over 1,800 and 1,746 respectively, but the gain was too marginal to make up all the losses. Remember, we had some losses coming into this year on rent. We realized that here on the hot sheet. Jerome Powell didn't realize that over the last year. And of course, their data hasn't because it's like 2 years. He just mentioned that when the last time we covered his comments, 2 years late on what's going on with the rental markets, or it takes 2 years to show up in the CPI anyway. The average gap between asking and effective rents remained above $90 for the third straight quarter, indicating the highest level of concessions in their tracking history. Okay, so asking rents, this is interesting. The average gap between asking and effective rents remained $90 for the third straight quarter, highest level of concessions in Moody's tracking history. Okay, so concessions are because of all this new multifamily inventory coming on. I'll give you a free month. I'll give you this. I'll give you that to go ahead and make sure that they keep that vacancy low on this new product. It's also, some of the areas where you've seen big multifamily, I'd imagine it's making it harder on the smaller investor. You got beautiful amenities in some of these buildings. Okay, so that's also a signal that there could be more pressure on price coming on multifamily, which would be actually good for the inflation that we're trying to fight. Okay, office, very interesting here. Office sector set a record vacancy rate at 20.1%, breaking the 20% barrier for the first time in history. Moody says the slow bleed occurring in the office sector has led to a steady rise in the vacancy rate as permanent shifts in working behavior have outlasted the initial wave of the pandemic 4 years ago. The permanent shifts in working behavior. I would definitely agree with that statement that there are permanent shifts in the way people want to work. We got a big office right now, and I'm looking across to 2 rooms. I'm looking down. I don't even see a body. I think there's 4,500 square feet. There are some bodies in here. Haley is obviously here with me on the BAM side running the show. But most of the people in this building right now, we've got 2 ISAs downstairs on the real estate team side. They're on a freaking salary. Bobby and Ashley on BAM behind this wall, they're on a salary. Denise, who's down there, she's on a salary. Emily's on a deal, who's running the accelerator agents and doing the training. And then I think we've got 2 of the new agents in here. There's 50 something agents that work out of this office. Okay, so they're not independent contractors aren't here. The people that have a paycheck tied are here. Okay, so when the independent contractor has the choice, they're not coming into the office. There's also a shift in a lot of employees. Hey, want to work from home a little bit, want to work from the office. There's a balance there. So I agree with the permanent shift. I think the vacancy rate goes higher on offices as some business owners just decide, hey, if it is a fight to keep people in the office, maybe I go smaller, just keep key employees in there, or variety of different things. You see hybrid work weeks. This number is projected to get into the 30% on vacancy, more so when a lot of the refinancing of these buildings come up and people just literally decide to walk away from them. Okay. Investors. Okay. If they've got to refinance at these high interest rates and the building is, worth less, they're underwater, they may just walk away. So office sector, record vacancy since tracking. The 20% barrier has been the barrier do not pass, broke that for the first time in history. Retail maintained its familiar trend with retail vacancy rate holding steady at 10.4%. And so that's been where retail's been at, and they stayed current on that. Okay. The industrial sector has enjoyed considerable growth the past 3 years. It was bubbling before that, I would say, too, with construction activities ramping up to accommodate high demand. However, the market moves towards a state of balance. The initiation of new construction projects is slowed. And there you go. Industrial. Do we have a vacancy rate? Demand fell. Okay. I don't have a vacancy rate on industrial in the Moody's report, but I would imagine, maybe I have it here. Vacancy rate is at quarter two, 2024, 6.5%. So that's up from 5.3 in quarter two of 2023. Interesting there for industrial. Okay. There's a lot more data on there if you're interested. If you're in a little bit of that commercial sector, apartment, office, retail, industrial, this is one of the best reports that you could get from Moody's, and they break it all down for you inside here. We'll have it all available for you inside of BAMX so that you can grab that. But the Moody Analytics current report on 2024 preliminary trend announcement just released here in July for all sectors of commercial, really the main sectors, the commercial real estate market. If you're interested in that, take a deeper look. Okay. Just wanted to give you the highlights there. The highlight on the 10-year treasury right now is 4.299. By the way, we've got a little breaking news at the top of CNBC. Fed Jerome Powell says holding rates high for too long could jeopardize economic growth. Interesting. Okay. He on Tuesday today expressed concern that holding rates too high for too long could jeopardize economic growth. Reducing policy restraint too late or too little could unduly weaken economic activity and employment. He said in remarks that are leading up to his appearance on Capitol Hill. Now we see that the 10-year hasn't moved much with his. He kind of leaks out a little hint of some of the things he's going to say. That's what that is. He hasn't actually got in front there and made these statements to Congress yet, but these are remarks he's making leading up to sitting in front of Congress today and tomorrow. We don't see much movement here based off of that leak in the 10-year. In fact, over the last 24 hours, the 10-year has gone up. If he reiterates that sentiment in front of Congress, I would expect the 10-year to maybe move down later in the day, with anticipating a potential cut coming sooner than later. Jerome Powell, who's been very firm over the first 6 months that, number one, our fight against inflation, we're not convinced that we're there, which means we can't cut. Political pressure, an election in November will have zero influence in our decision. Now, second half of the year, we've had some good inflation reports. We are closer to the election. There are many that believe he will get significant pressure to make a cut before November. Jerome Powell now saying, we don't want to wait too long. Okay, we might have to make he didn't say we might have to make a cut, but you can read between the lines. As we sat here, the 10-year, by the way, just popped up over 4.3. Interesting there. Not really sure what's going on there, but there's probably going to be very volatile today as they really kind of pick through all of his words, they being the investors. Okay, yesterday's 30-year fixed daily mortgage news daily survey came in at 7.01. That's down a little bit, and lowest level here in the last couple of weeks. We'll take that. Hopefully we can get down even lower by the end of today into the high sixes. We would, I think, all applaud that. We know as we get closer to 6.5, if we could get there, what that does for 60 to 90 day buyer demand. Okay. Next week, if you haven't signed up yet, we've got the BAM barbecue. Okay. BAM barbecue is Wednesday, July 17th, next Wednesday, for a reason, because August 17th is right around the corner. It'll be 30 days from this date. Okay. You'll be exactly 1 month from the August 17th NAR settlement implementation of the new rules. If you want to be fully prepared for the moment, join this free virtual event. Use the link down below so that you can hear from Sam DiBianchi, a luxury broker in Fort Lauderdale. She was the first female ever on $1 Million Listing Bravo series. She is brilliant, and she's been a broker, independent broker, for a long time. I'm really looking forward to the state of the housing market with her, as well as these NAR settlement changes. Her and I are going to do a fireside chat. Luca Cree, how to convert leads with Facebook advertising right now. So if you want to generate leads on your own, Luke's the guy to walk you through that. Chris Smith is going to talk about the science of sales, exactly what you should say in this market. We're going to be giving away some of his books, The Conversion Code. Tom Toole on time management. Paige Steckling on how she's producing listing videos that actually convert into business. She's the best in the biz on listing videos here in 2024. Myself, Eric the Broke Agent, and Luca from Action Agents going to be moderating this deal. BAM Barbecue, Wednesday, July 17th, 12 to 3. Make sure you sign up. If you've been to some of our past virtual events, you know that we have things like music and funny skits in between. I mean, this is unlike any real estate virtual event. This is our third of the year. If you've been to the last two, you know what's in store. Don't miss this one. If you missed the first two, the only way you get the replay is if you sign up. This won't be on YouTube. We'll replay it. Obviously, if you're in BAMX, you get the replay. It'll be inside of BAMX. But if you're not a BAMX member and you want the free replay, the only way you get it is of course by being in BAMX or by signing up. So make sure you do that. BAM Barbecue next week. Looking forward to seeing you guys there. I will see you later on today here on the main channel, now BAM YouTube channel. Make sure you're subscribed. We will be dropping a new Real Word podcast. I'll be reacting to some of the comments from last week's Real Word podcast, where we cover the California Association of Realtors form that they came out with, their buyer agency form. Consumer Federation of America has another response since we released that last. They had a press release. Now they just released a report since we did that last podcast last week. So a lot has changed in the last 7 days around these forms. We're running out of time. We're going to cover that all on today's Real Word podcast. Make sure you subscribe to the channel so you don't miss any new content or pods from BAM. So I'll see you guys over there and in the comments. Until then, toodaloo.